Welcome back to the Robert Stone Club channel. You know the drill. You've seen the charts blowing up on your feed. A completely unknown crypto token appears out of literally nowhere, and within days, it pulls a 10x, 100x, maybe even a 1000x return. Suddenly, everywhere you look, it's just rocket emojis. And then you feel it, right? That familiar fear of missing out. The very real FOMO that hits when you think you're just one click away from life-changing wealth. But then, in the blink of an eye, the chart violently turns red. That massive vertical climb, it crashes straight to absolute zero. The developers are gone, the community goes dead silent, and every single dollar has vanished. Today, in this explainer, we're going deep into the dark underbelly of the crypto world to understand exactly how these digital heists go down.
So, let's get one thing straight right off the bat. A rug pull, it's not some random market anomaly. It's not bad luck, and it's definitely not a failed business venture. It is a deliberate, meticulously planned scam. The creators intentionally hype up their token to attract as many retail investors as possible, and then, at the absolute peak of the frenzy, they strike. They drain the project of all its actual value and disappear into the digital shadows. This is a targeted heist, guys, and the victims are everyday traders who are just hunting for a win.
And these scammers, they don't just wing it. They operate using a playbook, executed with absolute cold precision. They follow a highly predictable, calculated blueprint that literally weaponizes human psychology against us. They know exactly how to manipulate your greed, your hope, and that desire for quick wealth. They set up a trap that springs shut way before the victim even realizes they're in danger. So, let's walk through exactly how they pull this off.
There are 6 distinct phases to this crime. Phase 1 is the bait. The scammers create a new token, usually latching onto whatever trend is hottest right now, say artificial intelligence. If legitimate AI tokens are having a bad month, these guys see blood in the water. They launch a fake AI token that miraculously shows a 200% gain in a week just to lure traders in. Then comes phase 2, the venue. They set up a liquidity pool on a decentralized exchange. Think of this as a pot of money where they pair their completely worthless new tokens with a highly valuable asset like Ethereum or Solana. But here's the catch. They control almost the entire supply of their token, meaning they hold the master keys to that entire pool.
Once the venue is set, they trigger the next 2 phases to create the perfect trap. The hype machine kicks into high gear. Armies of automated bots just spam Twitter and Telegram. Paid influencers shamelessly shill the coin to their unsuspecting followers, manufacturing this insane social pressure. They even set up fake Discord communities where any skeptical questions are instantly deleted and the user is banned. And all this overwhelming FOMO, it leads directly to phase 4, the pump. Retail investors frantically rush in, trading their very real Ethereum for the completely fake token. The price skyrockets vertically. Early buyers see massive paper gains, they tell their friends, and boom, the trap is fully set.
Right at the moment of maximum euphoria, the scammers strike. Phase 5 is the pull, and they use one of 3 ruthless methods to do it. The first is the liquidity steal. Because they never actually locked the liquidity pool, they simply withdraw everything. They take all that valuable Ethereum that investors poured in, which sends the token price to 0 instantly. The second method is the dump. The creators just sell their massive, hidden supply of tokens all at once. This completely overwhelms the market and leaves everyone else holding worthless bags. Or they use the code trap. This means the token's smart contract was rigged from day one. It might be a honeypot where only the developers are allowed to sell, or it's coded to let them print infinite new tokens whenever they want.
Once those funds are secured, we hit the final phase, the disappearing act. And the getaway is swift and permanent. That glossy project website? Offline. The hype-filled Twitter account? Deleted. Discord servers and Telegram groups vanish into thin air like they never existed. The stolen Ethereum or Solana is then rapidly funneled through crypto mixers to obscure the transaction trail. They wash the money, making it nearly impossible for anyone to track the thieves down.
The mechanics of this crime are practically perfect, but the real-world devastation left in its wake is just staggering. Now, before we look at the shocking evidence of just how massive this criminal enterprise has become, please take a quick second to subscribe and hit like for more crypto investigations like this one. It really helps us keep exposing these heists. Okay, let's look at the actual numbers. Listen, this is not some niche problem happening to a few unlucky traders on the dark corners of the internet. This is an industrial-scale fraud enterprise. In the year 2025 alone, it's estimated that rug pulls drained a breathtaking $1.8 to $2.8 billion from investors. To put that in perspective, in just the first half of 2026, rug pulls accounted for 35% of all crypto scam losses. That is $175 million stolen out of a total $500 million lost to fraud. Let's pull up a specific case file from February 2025. Meta Yield Farm. This project promised investors wildly unsustainable sky-high returns just to lure in deposits. And you know what? It totally worked. They attracted a massive amount of capital right up until the anonymous team suddenly shut the entire platform down. They vanished with $290 million of user funds in what became the largest confirmed rug pull of that entire year. $290 million. Just gone, literally overnight.
And then there was the Mantra Network, also known as OM. The collapse of this single project was so absolute, so catastrophic, that it accounted for an estimated 92% of all rug pull losses in the early part of 2025. The developers were actively manipulating the project's tokenomics and liquidity right behind the scenes. When the timing was perfect, they drained the pools dry, leaving their investors holding absolutely nothing.
So where exactly are these predators hunting the most? The answer is meme coins. A staggering 80% of all rug pulls in the decentralized finance space occur with meme coins. Why? Because meme coins rely almost entirely on community hype. They rarely have any underlying technological utility, making them the absolute perfect vehicle for that pump and dump playbook we just outlined.
To truly understand the terrifying density of this minefield, check out this data point from a 2026 study. Out of 100,000 new tokens analyzed, researchers found that over 75,000 of them were likely designed from the ground up to be scams. Let that sink in. That means if you are blindly throwing money at new tokens, the vast majority of the time, you are playing a game that is mathematically rigged against you from the very first line of code.
You know, it's easy to look at billions of dollars and think, well, this is just a game played by wealthy crypto whales. But let's bring this down to a deeply human level. The average loss per victim in these heists is a devastating $9,800. And in 2025, 70% of all victims had invested less than $10,000 each. We aren't talking about billionaires losing pocket change here. These are everyday people losing their hard-earned savings to calculated theft.
So, the crucial question is, how do we actually defend ourselves? It has to start with a mindset shift. We have to look at the massive difference between retail traders and smart money. Retail traders often buy in based on emotion, right? They trust the hype, they trust the influencers, they buy into the FOMO. But experienced funds and smart money, they rarely fall for this. Why? Because they treat due diligence as a mandatory, non-negotiable survival tactic. They don't trust, they verify the data every single time.
So let's build your ultimate defense checklist, starting with the biggest red flags. First, you absolutely need to watch for unlocked liquidity. If the developers haven't locked the liquidity in a smart contract for at least a year, they can steal it instantly. You also need to look out for high token concentration. If just one or two wallets hold 20% or more of the entire supply, they can dump on you at a moment's notice. And always be wary of an anonymous team with no verifiable track record or a vague white paper full of buzzwords but no actual, tangible product to test.
Continuing with our checklist, you must watch out for hype-only marketing. If the entire culture of the project is just screaming "when Lambo" and making wild price predictions without any real discussion of technology, stay far, far away. Furthermore, if you join their Discord, ask a totally polite question about their liquidity lock, and you immediately get censored or banned, yeah, that is a massive flashing warning sign. Finally, be on guard against suspicious smart contract code. Scammers will literally hide honeypots and infinite minting functions directly in the code itself.
To protect your digital wallet, you have to run a systematic process before you invest a single dollar. First, scan the contract for exploits using a token analyzer like Bubble Maps or Dex tools. Next, demand proof of liquidity locks on third-party platforms for a minimum of 1 year. Then, verify who the founders actually are. Make sure you mute those paid influencers and completely ignore the hype. And look, if you still choose to invest in a high-risk project after all that, start incredibly small with money you are fully prepared to lose.
We've seen the playbook. We've seen the billions stolen and the real-world devastating impact on everyday investors.
The crypto market offers incredible innovation, for sure, but it is also a hunting ground for highly sophisticated predators. So, as we wrap up this explainer, I want to leave you with one chilling question to ask yourself the next time you feel that FOMO kicking in. Who is really in control of the next trending coin you see on your feed? Stay safe, trust nothing, and always verify.